Okay, so we're on record. My apologies. It's I thought 30 minutes will be enough for me to make sure that hardware works, and I couldn't make it to work. So from time to time, I will be organizing these office hours. They're recorded. Everything is on record. If you don't want to be seen, so now you can turn on your webcam. I just wanted to check that I could see you and you could see me if needed. Now it's up to you whether you want to keep it open or not. And these office hours are recorded, and later I will share the link. And in fact, on YouTube, you can watch it live in real time as well. And during this office hours, what I'm trying to do, I will be trying to show you what your assignments are about and what we'll be doing, and some difficulties that students usually encounter when they are working on this homework. And today, my plan is to talk about your homework when you have to go from financial statements to calculating the cash flows. And before doing that, I would like to make an announcement, and it will be posted in Leo as well. And the announcement is that what I'm practicing in my classes, I do not allow you to resubmit all your homework. I know in some classes you are allowed to submit something early, and then professor will grade it, kind of preliminary grade, and then you'll have a final submission. Something like that we'll be doing with our projects that we'll talk about next week. But with your regular homework, you will submit it, and this submission is final. So I give you feedback, and that's it. But there is one exception. The total number of homework assignments is 5. So again, I'm not counting the projects, only what we call homework assignment. And you will be allowed to choose, if you are not happy with the grade for a particular homework assignment, you'll be allowed to resubmit it. And in high school, they would call it a free pass. So you're allowed to make 1 free resubmissions, 1 out of 5 resubmissions. And the only constraint here is that for 2 homework assignments, which will be later in this course, one will be when you will be evaluating the terminal value, and another one when you will be calculating the return for venture capital. All of you will be working with the same numbers. And for this reason, I will post solutions in about 72 hours after the deadline, once I grade all your assignments. And therefore, if you want to resubmit this homework, you'll have to notify me, and then I will postpone posting the solution. Because once solution is posted, you cannot resubmit it. But for other 3 homework assignments, for the cash flow, for WACC, and for valuation using multiples, because you will be working with your company only, there is no one universal solution. And for this reason, you can resubmit it pretty much at any time if you decide to resubmit one of these 3. Make sense?
Yes.
Okay, so 1 out of 5, 1 free resubmission, and then you will decide which one you want to resubmit. And maybe you're happy with all your homework, and then there is no resubmission is necessary at all. In module 2, what we'll be doing, we are looking at cash flows, and we are focusing on cash flows in this module. And one important thing for us to understand how from financial statements we get to the cash flows, because cash flows and financial statements are different things. And to calculate the value of the company, to calculate the value of the project, you need to deal with cash flows. And in this homework, what you're asked to do is to download actual financial statements of your company, and then you will have to, by using the income statement and by using the balance sheet, you will have to modify them, and you will have to calculate what free cash flows for this company was for the 5 years. I bring your attention to the fact that it will be over 5 years, although practice example shows 3, but it will be over 5 years. And so the first thing you'll have to do is download these financial statements. And I recommend using, for financial statements download, I recommend using Edgar. Edgar is United States Securities and Exchange Commission electronic database. And this is where all publicly traded all US publicly traded companies, they have to submit their financial statements. And so, for example, let's say we are looking at Tesla. I don't think anybody is doing Tesla because Tesla doesn't pay dividends, and I discourage people from using Tesla as their company. And so here, as you can see, and by the way, I like classic version, but you could use this version as well. And in a classic version, I would say that I want the filing of 10K, and if I do search, then that's so inconvenient for me that I cannot. Oh, okay, let's do this. Right. So here you see that there are financial statements for the last few years. And if I take the most recent one, that actually would be good for me, and I could even download my this statement as an Excel file. I could just click View Excel Document, and it will open as an Excel file already. So pretty much doing most of the work for me. The disadvantage, one drawback here is that it will show only 3 years. So if I go to balance sheet, it will show me only 3 years. And in fact, here it's only 2 for some reason. And I need 5. So that would mean that I would have to download more than one statement. And then I will have to combine them all into one template. Make sense? So you'll have to download more than one 10K. And you can either download it as Excel files, or you can just copy files from there. If you prefer downloading it from other sources, that is fine. It's the reason why I prefer Edgar, because Edgar is the official filing. And if I go to Yahoo Finance, I will see these financial statements as well, but Yahoo Finance copies it from Edgar, so there might be a problem here. And as you can see, I will be able to download. So once I download, the downloads would look something like that. So here, this is your practice example. This is what I downloaded from Leo, module 2, and it shows on the top, it's balance sheet. And here, you will fill in balance sheet for your company. And then it will be income statement. Again, you will fill in for your company. And here is one difference that we'll discuss later. This balance sheet in the example, it goes from most recent year to the oldest year. Alternatively, what you can do, and actually template is set up in such a way that the most recent year is year 5. And the oldest year is year 1. So time goes from left to right in this template. And you can keep it this way. If you change it, if you want to follow the example, time will be flying from right to left. And you'll see that in this case, you'll have to make some adjustments. And this is what I will be talking about later. So you need to download balance sheet and income statement items. And for the first thing that we need to do in order to move from income statement to the free cash flow, we need to calculate the changes in non-cash net working capital. And non-cash net working capital, why we need it? Because you will spend cash not only on your expenses, but also you will be spending cash on items that will affect your balance sheet. For example, if you are buying more inventory, it will not be reflected in your expenses right away, but it will increase your inventory in the balance sheet, and therefore that will tie in your cash. So any increase in current assets will have a negative effect on your cash because you will be spending cash to increase your current assets. Any increase in your current liabilities, in fact, will reduce your cash expenses. It will increase your cash. For example, your accounts payable will be getting larger and larger. What it means you already recognize it as your expense on your income statement, but you didn't pay your suppliers yet. Well, because you didn't pay your suppliers yet, that means that you have extra cash for some time, and that will be cash inflow for you. So for this reason, we need to calculate the change in your net working capital. Again, not the net working capital itself, but the change in your net working capital has effect on cash. And in the example that I have here, as your practice example, again, here it is from right to left, I calculate my non-cash current assets. So notice that it's not just current assets, it's non-cash current assets. Therefore, I will exclude from my current assets, I will exclude my cash and my cash equivalents. My cash and my short-term investments, which are kind of cash equivalents, I exclude them. And therefore, my current assets that I look at here, it will be current assets minus cash and minus short-term investments. Current assets minus cash and minus short-term investments. These are my current assets. My current liabilities are my current liabilities excluding my short-term debt. And my short-term debt, it's either current maturities of long-term debt, or sometimes you will have what is called notes payable. Notes payable is what we call a short-term debt. It's the form of short-term debt. The notes payable is a form of short-term debt. Make sense? So when we calculate current liabilities, we exclude short-term debt. And then the difference between these current assets and these current liabilities is my net working capital. And in this example, the net working capital was negative, which kind of, it's okay, it doesn't matter. Now, what matters is the change in the net working capital. If my net working capital was negative 200 and then it became negative 400, that would mean that there was actually a decrease, negative increase, which is decrease in my net working capital. How I calculate it, I take my net working capital from more recent year and I subtract net working capital from the previous year. And that will be the change. And I do it here this way because, again, I'm going from right to left. Now, if I were to set up timing from left to right, then when I'm calculating change in the net working capital, I would subtract my net working capital from year 2 minus net working capital from year 1. So here it would be current year, again, minus previous year. This is my change in the net working capital. Current year minus previous year, but here my previous year is to the left. In the example, my previous year was to the right. So that's the difference. It doesn't matter how you do it as long as you do it correctly. You apply it correctly. And notice what happens. I'm losing the change in the net working capital for the oldest year because I don't know what net working capital was in the previous year. I will lose one observation. So you will not have free cash flow calculations for 5 years. You'll have only for 4 because you will lose 1 year when you will be calculating the change in net working capital. And same will happen when you will be calculating your capital expenditures. So I calculated my change in the net working capital. And again, here it's the change itself. Then I need to calculate what my capital expenditures were. How do I calculate it? In order to calculate it, I would need to know depreciation. Now, in my income statement, I do have depreciation. It is right here. Sometimes when you download income statement, you will not see depreciation item on the income statement. But if you read notes to 10K, and if you look at cash flows there, then you will be able to see depreciation line item there. So that's where you will be able to find depreciation. if depreciation is not itself in the income statement. So if you report that depreciation was 0, that will be a mistake. Because for pretty much every company, depreciation and amortization is not 0. Okay. So depreciation, and then from the balance sheet, I will look at my net property, plant, and equipment. Again, in the example, it is right here. Property, net property, plant, and equipment. Okay. Now, why would I need depreciation? Because net property, plant, and equipment, the word net, it means that this property, plant, and equipment is net of depreciation. So they already subtracted depreciation. And therefore, if I look at these numbers, you see here I have 9,117,000, and then next year it's 9,197,000. So it looks like as if my property increased by 80 million, and I would think, oh, you know, my capex was 80. No, it is not 80, because even if there is no investment, then my net property, plant, and equipment will go down because of depreciation. It will go down. And therefore, what I need to add depreciation back to know what the actual investment was in that year, in 2012. I need to add back what 2012 depreciation was, and I add it back as a positive number, and I get that it was not just 80, it was 630. And this is exactly how I'm calculating capex here. So I see depreciation, and I subtract, that's 80, and then plus 550 of depreciation, and that's how I end up with 630. If it still doesn't make much sense, or I try to put some explanation here, here is the link when in this article, they try to explain in more detail why we have this adjustment for depreciation. Okay, so I know my capex, and I know my changes in the net working capital. Now I'm ready to calculate my cash flow. I start with earnings before interest and taxes. And here, the item is my operating income is usually very good proxy for earnings before interest and taxes. So it is right here. And then I adjusted for hypothetical taxes. So if I didn't have what my operating profit after taxes would be if I didn't have any interest payment, because we ignore debt. Debt is, we assume that financing was all cash financing, so we would ignore debt. We calculate what my after-tax operating profit would be by multiplying this number by 1 minus the tax rate. This example is pretty old, and at that time, the tax rate was 35%. In your case, because even the oldest year is probably already 2019, 2020, 21, 22. So only if you are using 2018 as, but usually 2018 you will lose. You start with 2019, 20, 21, 22. All these years, the tax rate was 21%. Only if, again, you calculate cash flow for the year 2018, that's when the tax rate was 35. In fact, you can even look at and try to calculate what the effective tax rate was for the company. But again, it's not necessary. You can just assume that it was 21%. So you calculate your operating profit after taxes, and then you add back depreciation. Depreciation is part of your expenses here when you are calculating your operating income, but it's a non-cash item. The only reason we use it here is because it creates a tax shield for us. We pay less in taxes. Now we add depreciation back. Yes? Oh, I thought it was a question. And then after that, we subtract what we calculated here as a change in my CapEx. You see here, I put it as a negative number. I put it with the opposite sign. I had 630. I put it with the opposite sign, and changes in the net working capital, I also put with a negative sign. Here, the change was negative, but because I put it with a negative sign, that's why it is a positive number here. And then I add this adjustment for depreciation, CapEx, and net working capital investment. I add it together, and that will give me my free cash flow. And then after that, if you want, you can do some write-up here, what you see from the cash flow, how company is doing. Again, you just add a couple of lines here for me to see that you understand what's going on with the company. And that will be your homework assignment. Questions? You can raise your hand, or you can just unmute yourself, or you can type your question in chat. I have chat open. Any questions?
Hey, Professor, are we allowed to ask questions about the project?
Daniel, I can barely hear you. Can you either speak louder, or again, I apologize. I have today not the ideal.
Hello, is this better?
Can you speak louder, or maybe type your? You may, so Justin says he has a question about the project. Yes, you can ask questions about the project, but I'm planning to do another office hour next week, and I will be talking only about project, but you can ask questions about project right now if you want. Jamie?
No, that's what he asked. So that's why I was just typing it for you.
Hmm?
That's what he asked. He asked, can he, or I don't know if it was, I don't know who it was, but they asked, could they make, have a question? Can they ask a question about the project?
Yes,
You said you couldn't understand them.
they
So
can ask
I just
questions
typed
about
it in
the
there.
project. Yes. It just, I wanted to say that there will be a special session about project. Yeah. Right, for the electricity scenario at the bottom of basic analysis, right. Okay. Do you see the project template? Right. What you have here, you have projections what electricity prices will be, and these prices, by the way, they're in cents per kilowatt. And they are vertical instead of horizontal. Then here, what I suggest you to do, I suggest to convert them from cents to dollars and organize them horizontally. So year 24 to year 28. This is your base case scenario. This is for which you actually will be calculating your NPV for this project in the base case scenario. But then when I will be studying what if analysis, sensitivity analysis, then a big question will be, okay, what will happen if this forecast for the energy, this reference case, is not actually correct? That's why they're looking at different scenarios. What will happen with electricity costs if our economy will experience high economic growth or low economic growth? What will happen if we'll have high or low oil prices? So you see that in addition to reference case, there are that many, 8 additional scenarios. And then in your scenario summary, sorry, this one, you'll be asked to look at what NPV and IRR will be if instead of the base case electricity costs, you'll have different electricity costs according to the scenarios that are projected. So then what it means that you'll have to recalculate your entire NPV by changing electricity costs here. So here you see that they are, for the base case, you are using your reference case, electricity cost. Again, don't forget, convert your dollars, your cents into dollars, and well, at least you don't have to make any other adjustments because your cost is 100% of national average. And then once you change this to a different scenario, for example, to a high economic growth, your NPV and your IRR will change. And then you'll replace this here. So this is not for project 1A that is due next, I mean, not even next week, but whatever, in week 4, at the end of week 4. But this is for later parts of the project. But if you have it ready, then it will make your life much easier once you'll need to calculate these scenarios. And this is what this table is for. Because for production volume, the table is already here, how many cars will be sold. But for electricity, you have to prepare this table yourself. So that's what you were supposed to do. Yes, you're supposed to put electricity prices here, and they are already given here. The only difference is that here they are in cents per kilowatt, and they are organized vertically. You just organize them horizontally, and instead of cents, yes, and you convert to dollar by dividing by 100. And again, theoretically speaking, you are supposed to multiply it by also 100%, but in this case, it still will give you the same number. Okay. Any other questions about homework? So discussion topics, quick reminder, don't forget to comment on your classmates' posts and also respond to their comments on your post. I noticed that some of you, even if you comment on others' posts, you do not comment you don't respond to their comments. I was planning to do it this morning. I didn't finish. I'm still grading the discussion. Hopefully tonight, if not, then tomorrow, week 2 discussion will be graded. Yeah, hopefully today. Yeah. Oh, you mean when, right. Okay, that's why I understand your question, Daniel. Yes, so Daniel is asking pretty much what is the latest when you can respond to comments left by others. This is the reason why I encourage people to make their posts early and also comment on others' posts early as well, because that will give enough time people to submit their replies Tuesday by the end of the day on Tuesday, because officially week ends on Tuesday. Because what happens if you comment on somebody's post on Tuesday evening, they won't have a chance to respond. Therefore, what I do, I revisit these discussions later as well, for example, week 1 discussions, and see maybe somebody responded to comments left for them. This way I can adjust their grades, the rubric that is how they respond to other people's comments. You cannot leave your comments for others after the deadline, because that's way too late. But you can still respond if somebody left comments for you, let's say on Tuesday. You can still do that. Make sense? So again, I strongly encourage people to submit your post relatively early. Relatively early, I would say Sunday I consider reasonable, because then people would still have a couple of days to respond. And then if somebody commented for you and they did it before Tuesday night, then if you didn't reply, I assume that you didn't respond to that on time. So you get deduction for that. But if you respond later, I might still give you partial credit for that. Yeah. The last day to post the original is Tuesday, but you will not get the full grade for that because timing is important. Okay. Yeah, Sunday, if it's a good post, at least for the post itself, full credit. Yeah. Yeah. Sunday is the last day to get full credit for your original post and for your comments to others. And then Tuesday is the last day to respond to comments left for you, assuming that they were given within reasonable time. But if somebody leaves a comment for you on Tuesday, you still can respond later, and I will give you credit for that later. Any other questions? Well, I hope I will manage software to work better next time. But thank you very much for coming. And again, recording will be posted. And there are two ways to access it. Either you can do, you watch YouTube playlist, or Zoom recording will be posted as well. Well, thank you very much for coming, and see you next week.